I'm like super thrilled about this.
I'm excited about this too. I really am. Thanks for asking me.
Thanks for being available to do this with me. I know you're super busy, but I was cleaning my car last night, like late, and I was like, you know what? And like I was bothered by the interest rates because I know that they just went up. And I'm
Yeah.
like, I'm going to discuss this because it was really like bugging me. And I'm like, we're going to talk about this and I'm going to talk about it with no one other than you, obviously. So I'm super pumped about it. So I have so many questions, as I'm sure probably a lot of people do, but
Mhm.
I figured we could just discuss a little bit about what's going on in the world because it's driving me crazy and it's driving my clients crazy. And I get so many
Yeah.
interest rate questions, and I'm like, man, like we could talk about it, but you're much better off talking to you. So figured if you want to shine some light on it. So yesterday the interest rates went up. Let's go into that.
Yeah.
How? What are they?
Oh, yeah. Yesterday, Canada released, they did another policy interest or key interest rate hike. Um, Kind of expected this. I mean, there's a little bit of chatter about expecting one more. Um, it's to slow inflation, just to slow spending, lower inflation, and once like inflation comes back down, rates come back down. But yeah, it was definitely nerve-wracking for some, but many of my variable rate mortgage holders are weathering the storm, through this. So not too big of a concern. I mean, I think there's a rough math that every $100,000 of mortgage lending that you have, it increases $30 on your monthly payment. So it's not too bad for some. But if it is like, if you're feeling the pinch, then you just got to talk to your broker and you can always lock in at a fixed if you chose to. But many of us are riding the wave.
I shared, I'm actually just pulling it up on my laptop so that I can reference it because I don't want to lose the live. But
Yeah.
I shared what you posted. I'm pretty sure it was yesterday about the interest rates because you just said for every 100,000 it goes up only by like $30,
Yeah.
roughly ish.
Yeah. Exactly.
Fair enough. So what you posted yesterday was like very friendly because I like sat and I read it and I'm like, this is like really good information. So let's get into it. Because I don't think that people realize that. Like there's a huge difference, dollar value between 300,000 and 400,000. But when you break it down, it's like an additional 30-ish a month. But how does that affect like approval or lending?
Yeah. So it affects approvals for clients by um, the qualifying rate. So whatever you qualify on your mortgage or whatever your mortgage term is going to be for, and if you are in a variable or that's determined by what the lenders are offering, um, you have to qualify for this rate plus 2%. So if you have a fixed rate of 5%, we have to qualify at 7%. And that buffer is to protect when interest rates do rise to show that, you can afford the mortgage if interest rates do rise. It was implemented for not only to prevent like a crash, but also to ensure that people who are buying homes could actually afford them if interest rates rose. Yeah.
Wow.
Yeah.
That's actually because people are always like, I forgot about that buffer. I knew that there was a buffer. I
Yeah.
just forgot about it.
Yeah.
The last couple of years have been a little crazy. So from like 2019 to 20 now, since before the pandemic, or because I know that when the pandemic kind of started, it was very unknown to a lot of people, but people were still buying houses and people were still getting approved and people were like, it was a hot market. And I think that it was because people were kind of on lockdown, like
Yeah.
they
Totally.
couldn't travel.
Yeah. And like people weren't spending, right? Like we were spending less because we were on lockdown and we were spending all of our time in our homes. And so one of the biggest things that happened is that people realized maybe the shortcoming in their home because it was amplified from them spending all their time in there. But it has been a while, years. The pandemic has made the mortgage industry shift and how we do business and how lenders look at your file when you're applying for a mortgage. You know, more paperwork for my clients, more paperwork for me. They're, you know, lenders are doing their due diligence, as they should, to make sure that you can afford this, that you can qualify for this. And yeah, we saw some crazy low interest rates in 2020 and 2021. And I think that created the boom. You know, qualifying for the mortgage became more affordable. People were spending all their time in there. They were spending less money. So they were building up capital for the down payment. And so it just became a lot more attainable. But yeah, it was
So it was ridiculous. Like I'm pretty sure that was record breaking because there was, I think, between March and like September. Oh my goodness, couldn't keep up. It was like I've never seen before. And so that's why I'm excited to see like what the years ahead have to like are gonna happen, but nobody really knows. So I'm like, let's just reflect back and try to figure out what's going on. But the effects of the pandemic have affected how easy it is for somebody to get a mortgage. It must have. You kind of mentioned that. Lenders are really doing their due diligence.
Yeah, yeah, for sure. I mean, at the end of the day, you know, if your credit score is, you know, in above, I mean, even if it's below 680, there's options for you. But if you're looking for the best rates and prime lending, you know, 680 and above, you have a stable, not on probation, and you have cash and fallback for the down payment, closing, and for fallback. You know, you can qualify for something. So it is still possible, you know, and I think it's just what that purchase price looks like and what that mortgage volume looks like. If you're going to put less than 20% down, 20% down or more, you know, there's lots and there's lots of like fluctuating factors.
Um, I wanted to ask you, oh, right. Okay, you said a credit score of about 680.
Yeah.
You also posted a video, like just earlier today or yesterday, I can't remember,
Yeah.
about how to check your credit score without like affecting your credit score. I
Yeah.
get asked that one all the time. Personally, I use Credit Karma,
Yeah.
which I know isn't like 100%, but you posted this saying Equifax. What, just out of curiosity, what's that about?
Yeah, so Equifax came out with the ability to um, check your credit online. You can get paper statements too, but you can sign up, get an account with them, and it's free to check your score and review the information that's happening on your credit and what's on your credit report. This is new and an offer. I do feel like all the other ones are off. So, you know, majority of my lenders, they use and some TransUnion, but Equifax it's so key because lots of those prime lenders, if you're 680 and above, like you'll get that best interest rate, right? You'll get the best mortgage terms, not just about interest rates, but you'll also get the best mortgage terms. When you fall below like 600, you know, there's a bit of a buffer there between 650 and 680, but if you fall 650 and below or below 600, you're looking at different lender pools. So you're looking at different interest rates and a different down payment that's required. And so I like to try to push or educate everybody into as high as they can get it because it's the most beneficial for them.
Yeah, of course. I mean, people know how important credit scores are, but I don't think they recognize how important they are for like,
Lending.
I think people know that it's important, but they're like, they don't recognize how important.
Yeah.
I would love to do another session with you on just the steps of getting approved and just like break it down. But right now I'm like, I just, that one came to mind because you were talking about the credits, but, we should do this again and we should talk about just the approval process because I know that it's different for everybody and I get that question a lot too, but
Yeah.
we'll deep dive into. I'm so tempted to do it now, but let's deep dive into that some other time.
I feel like I could talk forever on it.
That's what I'm thinking too. I'm like, yeah, we could get carried away with this one. But no, okay. So anyways, I get a lot of questions about the difference between fixed and variable.
Yes. Okay. So, the main difference is your interest rate stays the same or fluctuates. Okay. So a fixed interest rate or fixed rate mortgages, they're set on, your term is set on a fixed rate. And that was determined at the time you signed the contract with the lender. And that'll be for that term that you're in. So typically you hear 5-year terms. So I'll just use that in this scenario. Um, and that's kind of as it is, your payment stays the same, your rate stays the same for 5 years. And they've kind of just, the way they've done it in a way is set an interest rate that they project will be reasonable throughout the 5-year term, right? And at the end of the 5-year term, you're up for renewal. You can change terms, change scenarios, refinance, so many options. If you choose a variable rate mortgage, you are influenced by the prime rate that's set by Bank of Canada. And so the prime rate today is 0.45%. And when you have a variable rate mortgage, your rate is actually prime minus 0.90%, for example. And so what that means or correlates to today is that you are at 5.55% rate. That fluctuates. So if Bank of Canada changes prime up or down, then your mortgage payment will change. Your prime less 0.0 or prime minus 0.90% never changes, but prime can change. So if it goes up or down, you'll see that reflected in your subsequent mortgage payments. The lender reaches out to you. And I think, it's totally dependent on your scenario, what's best for you. Are you on a fixed income? How's your cash flow monthly? If it's slimmer and you have more expenses, then I often suggest, like, if you're not going to be able to accommodate up and down, then fixed might be the great scenario for you. But if you're somebody that has a little bit more cash flow and a little bit of up and down income, maybe an entrepreneur or vice versa, variable might be a great solution for you. But truthfully, it just comes down to a feeling. Like, if you feel like you're going to stress over one or the other, then that's probably not the one for you, So kind of hear my client, direct my clients that way.
So it's not like a one size fits all because people are like, what are the rates now? I'm like, well, they went up,
Yeah.
but like, it depends. Like, what are you looking for? Like, what are you into? What's your situation? I'm like, I'm not qualified to tell you, but let me set you up with this person. I love that question because it's like, yeah, you want to know, but there's only so much you can share. Between the two, I know it kind of is dependent per person, per individual, or it's a case by case scenario is the words that I'm looking for. Do you think that generally speaking, one is better than the other?
No, I don't necessarily think one is better than the other. I have, like, it is always like I ask all these questions to really get the bigger picture here and like what it is your 5 years looks like, let's say, because there's statistics like if you're not going to stay in this property for 5 years, break penalties come into play. And when we talk about break, oftentimes variable rate mortgages are advantageous for breaking your contract earlier. So then we'll discuss that. Like if you're looking like, okay, I'm going to be in a 5-year term, but I might move in 3 to 4 years. Like we would have a completely different conversation about, let's do the math. Let's determine if it's cost effective to be in a fixed versus a variable in 3 to 4 years when you might move. And we make decisions like that, right? It's long-term planning. But no, there's not one that's better than the other. It's totally dependent on your situation and your personal finances and budget. Like, for example, my mother-in-law, she's in a variable rate mortgage right now because she doesn't know how long she's going to stay in her home, like I mentioned. And she chose to go with variable to help lower those break penalties, like I mentioned. And then she can either move or not move as she sees fit. Another thing with variable right now is many people anticipate that there will be a fall in the prime rate in the future. It's unknown, but that it's possible. And I think that, that's maybe why people stay with variable. And historically, variable has been more advantageous over 25 years. And So I think people are just hedging their bets with that. But there's not one better than the other.
I think it also depends because like I get people, obviously I work with first time home buyers and then I also work with, well, I work with everybody, but I also work with investors too. So like I get investors who are super pumped about like variable and the first time home buyers are like, oh, I got this great rate because I signed on for like 25 years. I was like, okay, cool. Like, like I think that it's also depending on what your goals are. That factors in big time because there's long-term planning. Like real estate's not it's not by any means a short, it's not by any means a short game. So,
Long term.
but next time somebody asks, I'm gonna be like, this is her number.
Yeah.
Just call her and she will educate. I'm just gonna send people this video and I'm gonna be like, look, we discussed this. You may or may not have seen it. Um, I get people who, oh my God, first of all, rental rates have increased. I have so many people who are like, look, I want to buy a house, but like these interest rates are scaring me and like I'm gonna do it in the new year. I'm gonna rent for a year and then do it. I'm like, sure, like let's let's
Yeah.
unpack that a little bit. So they're like, I don't think I'm gonna get approved. Like I know I won't. I was like, okay, like have you talked to anybody? Like
Mhm.
no, like I know I won't get approved. I'm like, okay, but how do you know this? Like what if, like why don't you just check? So I guess a big question I'm asking is like, even with the way that the media is around the interest rates,
Mhm.
can people still get approved and like, or should they literally just kind of tap out? Because I've got a lot of people who are tapping out, and I'm like, just please look, like do your research.
Yeah. I think like first off, of course people can get approved. Absolutely, right? And if you're starting, like if anybody is starting to question that, the only way you can confidently make that decision is if you actually go through the process of understanding your entire portfolio as a whole and speaking to a mortgage broker. And then you can like have an educated decision based on that, Um, qualifying right now, the only thing that's really changing is how much you can qualify for, how much your mortgage can be, what your purchase price can be, depending on your down payment. That's what's the amount that is affected. So I have to point out that like in house prices are starting to lower. They are starting to come down a little bit. We are seeing the appraisals come back lower than compared to 2021 or 21 and 22. And that monthly payment, even though interest rate is rising comparatively, I about this on Instagram, but comparatively, the payment is so similar still. So like I have an example like right in front of me here. Sorry, I'm looking to the side, but for $500,000 that was appraised at in January 2022, October 2022, it went down to 400,000 as an appraised value. Okay, it's still the same. The interest rate has changed. So, in January it was 2.79. Today it's five, or in October it was 5.44. The mortgage payment is $10 difference. That's it between the two. So realistically, if you thought you could qualify then, you could still qualify now. Your purchase price is just going to change. And that doesn't really necessarily mean that you're affecting what you can buy because values have come down too. And it's all kind of level to its own playing fields. And at the end of the day, investing in real estate, investing in your home, saving for your I always like say, I know it's a little bit off. I always say it like your home, when you own your home, it's a savings plan for your future. Like if you think of that way and you're in there for a long-term gain, it's going to be advantageous, right? And prices and values will come back up one day, like just like they do. It's cyclical. It does it all the time, right? So yeah, I think people, rent is 100% interest. If you're paying a mortgage interest rate, you're better off because now you're pocketing some money in the end, right? And people still need to buy homes, and home ownership is an investment, like I said. And yeah, I mean, when you have homeowners or homeowners in communities, it changes the way people act, the way people see their lives. It changes their families. It changes their neighborhood. It changes society. People take value in their home and treat things in the community differently home differently, right? So I think, of course, if you can still qualify, and there's so much meaning behind it, even if we're in this really weird economic state and the media keeps blowing things way up.
Well, I think that, like you said, first of all, it's definitely a long-term game. Like it's not like return of investment within days or months or even a couple years. It's like later. So with people who ask that question, and you're right, when you have a homeowner who like takes pride in their home, it affects the area, it affects the neighbors, it affects like the value, it affects literally everything.
Mm-hmm.
So that's another thing that people need to take into consideration. But it's
Yeah, your
yeah,
call becomes more enjoyable in the sense of the community. You know what I mean? Like you get to know your neighbors and it's long term because they've been there for a very long time. You know, they help each other out. There's so much more to it than just rate, you know? And interest rates are like, honestly, there's so much focus on interest rates, but there's so much more contract that you're signing than interest rates.
oh my God, yes.
It,
I know when I signed my mortgage, it was like ah,
yeah. And the prepayment privileges, like how much you can top up every year, or break penalties and how much that's going to cost you if something were to happen and you had to move, or you know your job moved you or whatever. Sometimes there's clauses in some people's contracts that say if you don't re-sign, some lenders, you know, I've seen that, like they don't, people aren't catching that, and that's, it's scary because they're focused on just interest rate.
you know what? I'm the type of person who doesn't sign anything without reading every word. And like I have clients and like I have no problem with it because I know that I'm not giving them anything weird to sign. But like I have clients who are like, "Oh, I'll just sign here." I'm like, "Okay, but don't you want to know like
What?
what you're signing?" Yeah, and like we'll joke about it, but they're like, "Well, I trust you." I'm like, "Well, I'm glad that you do and you should, but like, like you should get into the habit of reading what you're signing." Like
Yeah,
in the real estate purchase, you have your mortgage broker, your lawyer, your realtor, like you're gonna be signing a lot of contracts and they're not just like a simple one pager. Like you should read what you're signing.
yeah,
So when people tell me they're like, "Oh, I'll just like where do I sign?" I'm like, well, for starters, signing over your firstborn, and they're like, wait, what? I was like, you should read what you're signing. Like, get into that habit.
yeah,
So, same thing with mortgages, especially that one, it freaks me out because like I know when I signed for mine, I I was guilty of it. I didn't quite look into depth as much as I should. But it's also important to like work with people that you trust,
yeah,
right? Because like if there's any kind of doubt, then you need to kind of rethink your steps because it's important to have a good team behind you who you know is going to look out for you.
hmm,
But you're right. Like that penalty, I get that one asked all the time from my sellers. Every single seller's appointment I have asks me about the penalty. I'm like, man, I don't know what your penalty is.
yeah. And you know what? Honestly, just I get asked it all the time too. I can calculate a rough guess, but the moment that you are like you're already in a term with a lender, um, without granting me access, I can't actually get the exact amount that they're going to charge. So, you know, my feedback for that, for anyone who wants to find out what a penalty would look like for them, like reach out to your lender. Okay, what is it? What does it look like? What's the price of it? And it does change just because it is what it is today. The closer you get to the end of your term, it will go down. So, or in theory, go down. You know, so I think just had to add that there. Like, call your lender if you know, because I can calculate a rough thing for you, but it is still rough, right?
Of course. I mean, the only person who's going to know is like the direct source. But yeah, that's another one. Like that's just one of the many things that you're signing off on and people should anyways, side note, people need to read what they're writing
True.
or what they're signing. Okay, my last question for you, because I really don't want to keep you. I know that I know you're busy, so and I appreciate you squeezing me in today. So um it is fun, right? Um so if I have somebody who wants to buy a house in like March and I'm like, hey, and they're like I want to buy a house in March. I'm like, okay, cool. Like, let me send you some ideas, whatever. And I go, are you pre-approved? They're like, no, no, I'll get pre-approved closer to March. Would you say it would make sense for them to see you a little earlier than March, or
Yeah.
do you think that they should get pre-approved a week before they put an offer out?
Oh God, don't do that. That's so stressful for everyone. Stressful for you, the client, like stressful for you, Maya, stressful for me, stressful for lenders, for stressful for lawyers. It's just not in the like in your best interest when you're a home buyer to leave it to the last minute. There are so many things that come up, and there are so many things now that have been just year after year, like become more challenging about becoming a homeowner. And like you want to be prepared. This is a big decision. This is probably one of the most expensive decisions that anyone is making in their life. And being prepared is the best thing you can do to your nerves, your stress. You don't want to come out of your purchase and be like, oh man, that was the most stressful thing in my life. Like, I'd never want to do that again. Like, that's not what this is about. I mean, this is supposed to be your house, right? This is supposed to be your home, your safe haven. So make sure you're shopping wisely and taking your time to prepare wisely, just like you would for a car. Like you're not just going to go buy the car off the lot. Pick your neighborhood just by moving your finger around Google. Like you are going to things, and you need to take that into consideration. And starting early allows you to build up your credit. If you need to build your credit up, it allows you to save for closing costs, because a lot of times, especially new first-time home buyers, they focus on the down payment, but there is additional closing costs that you need to come up with, and that covers legal fees and land title transfer tax. So speaking with a broker, sometimes a few months, like maybe 3 to 6 months in advance, is not a bad idea. Even 1 year in advance. If you're like, hey, I have a 1 year goal and I'm setting that to buy a house in 1 year, how do I get there? I have a client that just reached out to me a couple weeks ago, and he's like, I, how do I make that happen? He's a business for self. So it's important to think about the long term, especially when you're business for self, because we take income off of your tax return, right? So you may have to top up the down payment. If you want to purchase a home that is more on the higher end of a price point or a higher end in your budget, maybe you have to come up with more down payment to come offset that. And sometimes we need to look at locations. Like, is this somewhere you're going to be long term? And maybe you have goals to buy your owner occupied, and you have goals to buy a rental. There's planning for that. So the best way to prepare for purchasing a home is just speak with a broker. And now more than ever, you have to speak with a broker, and get the service and support from a broker, because you shouldn't be tied to one lender. Mortgage brokers have access to so many lenders. Like I don't even know the proper number. I should count it, but it's got to be close to 100 lenders. And we offer such a support. It's, for the most cases, it's free. Like if you're a prime lending, it's a free service, and we work in the client. So why wouldn't you take that?
Oh, absolutely. I get people who are like, and you're right, because I I like my clients come to me and they're usually pre-approved. And then when I have the few that are like, I'm thinking about buying a house, I'm like, great, are you pre-approved? It's the first thing out of every single conversation.
Yeah,
Like, look, I'll send you as many homes as you want, but
you have to be pre-approved.
like, let's get this done. So, you know what? I have a curious question actually. So let's say if I got pre-approved now
Yeah.
at whatever rates, can I lock in those rates? Or like, do I, like, let's say I get pre-approved now and I want to buy in like 4 months. Can I lock it down? Or is it like, oh, well, your 90-day period or whatever it is up. Um, you have to kind of start over. How to, like a general timeline?
Yeah, so you can get like, we like to say more of a rate hold than a pre-approved, because a lot of lenders actually don't, when you do what we say is a pre-approval out, when everyone talks about that, the lender is often, there are some that fully review it, but a lot of the lenders actually don't fully review it. What it actually translates to is a rate hold. And you can do holds for 100 days. Some lenders have less, and you can do builds longer. But for the ease of this conversation, 120 days is what you can hold a rate for. If you came to 121 days and you're like, I found the home, all that would happen was you go to the rate that it is at that 121 first day, right? So
Okay.
over, then you're subject to the current rates. If it falls under, then of course we're just going to submit for a new rate, right? Because that's advantageous for the client. But either way, I always say it's awesome to get a rate hold. If you're planning on shopping, let's get you a rate hold. If you don't buy within that 120 days because you don't find it, oh well, at least you tried, right? And when that 121 days comes around, or maybe 90 days, because maybe we're like, oh, no, it's going to take another, I don't know, 60. So maybe at 90 days, I'll say, okay, we'll just get you a new rate hold. And we'll just hold it for another 120 days from that 90-day mark. And we can just keep doing that until you find the right home. But the interest rate is only held for that first 120 days and does expire. And so I think that's super advantageous. And it's something that I have been doing the entire time through 2022, basically, because just kept going up.
That's what I figured. I figured that because I have people who are like, oh no, like I need to buy before my rate expires. I'm like, okay, but did you talk to your lender about that? Like, have you talked to your broker about that? Because I think you can hold it down for a little longer. Like, you're not forced to buy a house because you're tied or married to this rate. Like,
Yeah,
you gotta, if you find a place, great. But if you don't, like, you don't want to resent your decision to buy a place because you felt that you needed to,
right.
when in reality it could have been avoided with a simple conversation.
Totally. And I mean, each scenario is different. It always just depends on your income and your credit and how much cash you have, for the down payment. So you just talk with your mortgage broker. They can tell you what the current rates are and what that reflects in your file and how that looks for your scenario. And then you can make the best choice at then. If you do decide to jump the gun and pick a home, and let's just say because of your scenario, you had to be able to qualify once the rate dropped, right?
Yeah.
Which is an extreme scenario, but let's just say it happens. And let's say you live in that home for a couple of years and then you turn it into a rental or you sell it 5 years down the line. At least for that period of time that you were living in that property, you're not doing 100% interest into rent. You're doing whatever the interest rates are for that term for you. You know what I mean? And you're building equity in your life and thinking of your financial future. So even if maybe the home's not exactly what you wanted, which is my scenario with the house that I'm in now. We had put an offer in. We fought so hard to get this like dream home, quote unquote. And then, the Bank of Canada changed the rules for mortgage rules. And this was back in 2016, if anybody knows about what happened. But basically, we were not going to qualify the same purchase price. And we knew we had to purchase a home in a small window. And this was the second best home. And honestly, I love this home. I honestly love it. As you grow in your home, you can do upgrades and changes as you want to. I don't know. I think it's never a bad decision in my opinion, but
Well, I mean, you're talking to me, I 100% agree. Like, you don't have to sell me on the idea of buying. I believe in obviously buying over renting, unless you're in a position where you just simply cannot buy. That's
exactly.
different. But like, if you are in a position to buy, then again, the only investment you'll never ever lose on is an investment into yourself. And if you have the right team behind you,
Mhm.
there's no reason why it shouldn't be a success. I could literally talk to you all day about this.
Like
I love chatting with you.
I love how intelligent you are and how like real you are, and you just logically think about the whole picture, and I see that. So it's really enjoyable to chat with
Yeah, because we're like-minded. You are the exact same way, and I love it.
you. I know.
Well, yeah, no, we should, you know what? We should do it again. We should do this like every now and then and just update people with what's going on and just to keep looped in and have some laughs and have some conversation. And next time you're in Edmonton, wait, please let me know when you're in Edmonton and I will definitely be bugging you.
I will. I'm coming up for the holidays, so we'll get together.
Perfect. I'll get you coffee with like a little
A little time. Yeah.
top up.
Yeah.
Okay. Well, if people want to reach out to you, by the way, I was creeping on your website. Oh, it's amazing. It's so user friendly. I'm like, I'm going to share this to everybody.
Thank you.
So it's awesome. But if people want to reach out to you, they've got your Instagram just through this live, and
Mhm.
then just go through the website and the link in your bio.
Yeah, yeah, definitely that. Or, I mean, in my bio, or on my link in the bio, I have many different ways to contact, book a meeting, you can make a call, all of that. But yeah, definitely. You can message me on Instagram too, and we can set up a time, whatever is easiest. I am available by all means. You
I
feel
will definitely be bugging you. I'm sure I will be bugging you. Every time somebody asks, I'm like, you should talk to her. And they're like,
love that.
okay, what can you tell me about her? I was like, just give her like the first 10 seconds of your call and you'll fall in love with her. So,
Oh,
so
you're so
there you go.
sweet.
But anyhow, I'm gonna let you get back to your day. I really appreciate all of the info. Um, I'm super pumped about 2023. I think it's going to be a very interesting year, interesting in the best and worst ways possible, but I think it's going to be a necessary year to get us back on track and into like a little bit of a steady type of
Yes.
2024, hopefully.
Yes, that's what I'm hoping too. I'm hoping 2023 just leads into like normalcy for us, and
Oh my God, yeah, absolutely. Well, I guess we'll wait and find out, and we'll touch base, and we'll reevaluate at that time.
definitely. We can
Okay,
just chronically just determine if things are changing by watching old videos.
exactly. Yeah, we'll just save them, and then we'll just keep up, and we'll see how to monitor it from there.
Awesome. Well, thank you so much. Hope you have an and this was really great and just appreciate you inviting me to this. So,
Thank you so much for taking the time. I will talk to you soon. I will hopefully see you soon,
yes.
and we will keep in touch.
Okay, take
Okay,
care.
we'll talk soon.
Okay, bye-bye.
Bye.